back in Chile.
There we
Oh,
go.
no. Awesome.
Now you're famous, Chris. You're being recorded.
Well, that depends, right?
So you
I
said
have,
you said you're from Chile?
yeah, that's right.
If I said that wrong, I apologize. I've only visited. I'm not a native, but beautiful, beautiful place to visit.
Yep,
Yeah, it's a beautiful
absolutely.
country. It's a beautiful country. And it has gone a bit south, like during the past years, right? But well, it's the most southern country in the world, so what could you expect, right? Well, back in
Awesome.
Chile, I'm an attorney, and I've been an entrepreneur since like 10 years ago, when my first child was born. So I've been independent for a long time. Coming here to the States, I worked in construction and then got my realtor's license, and that was not a long time ago either. So that was like 3 months ago, actually.
Oh,
I,
wow. And look at you. That's great. Congratulations.
well, thank you.
Yeah.
That is
So
awesome, Chris. That is really awesome. I'm going to give you just real quick background on what I do, and then we're going to dive into trying to help you with the scenario you're looking at currently. I buy and invest in notes pretty much nationwide. There's 3 states that I don't work with just because of the long foreclosure process. I don't do any work in New Jersey, New York, or California, but I buy from banks, buy from hedge funds, buy from individuals, do a little bit of brokering as well, but primarily we're in the business of purchasing and investing in real estate notes. So that's who and what I am. Going back 25 years or so, I've invested in real estate, purchased pre-foreclosures, bought government-owned properties, been a landlord, all kinds of other fun things. I've found working in the note space to be more efficient, just a personal choice, right? I like not having to deal with, frankly, tenants, trash, toilets, termites, all that good stuff. So that's enough about me. I just want to tell you what I do. I help people structure note transactions as well. I think that's what this conversation is going to be about. If you'll tell me what you're looking to help shape. Now, I understand you're a realtor currently, is that correct?
that's right. So I got contact with a few investor buyers that usually they buy a home, fix it, and flip it, and then try to sell it, right?
Mm-hmm.
So in that space, I know I have two right now that are in the position of selling the homes, right? One has struggled for a long time in selling that home. He invested too much money in it, and just he wants more than it's worth, right? So
That's
nobody,
tough to do.
no, yeah, nobody has taken this house from him, and um, I have the feeling I can help him out, but there's another one that they just finished, barely finished the home, and I talked to them. So I went. That's how I met Anna at first. We went to the same this class of Nathan Turner, right, and the Canadian note guy. So
I know who Nathan Turner is. He's a very good note investor, as a matter of fact.
yeah, so and that's how I got into notes first. Like just a couple of days ago, just figured out, hey, this might be a good opportunity
Mhm.
to like get all this hard money right into a note and then sell it off, right?
It's
And
it's a way to do it, yeah. I mean, I told you up front, this is what I do. I'm very biased toward notes. I think it's the only way to invest in real estate, but I'm just telling you up front, I'm very
yeah,
biased.
but
I
there's a person for everything. So sometimes I see, I don't know, a ridiculous hat, right? And but there's somebody that's gonna buy it for sure. Like
Yes, sir.
so as ridiculous as it may sound, there's so many guys there out there doing fix and flips. So and so many more stuck with homes. So it's I think there's an opportunity where by creating maybe two nodes, one for the hard money and all the construction costs and getting that out, and then another one that the flipper will keep and then harvest their own profit, but with interest, and
Yep.
it's pretty attractive.
Yeah, you're already thinking toward a successful outcome. So yes, I agree with what you're saying. I do something very similar with actually about 6 different people in different parts of the country, either agents or rehabbers directly that are looking to eventually get a little bit of counsel. Now, I'm not an attorney. When I say counsel, I don't mean legal counsel, but they want to get a little bit of advice about how to structure the notes. There's a lot of different ways to do that. You probably already know that. The typical way to do this, now, we want to do this with the best outcome in mind for the note seller, right? How do you reduce the discount? There's always going to be a discount. How do we reduce that? So we're just super upfront with people and say, there's no note sale without a discount. Selling notes at par is technically possible, unheard of though, right? It just, but
Yeah.
what's the reason for the note investor to get involved? So with all of that said, there's many
But
different structures, but
I,
yes,
I,
we can certainly help. Go ahead.
sorry, I just think that maybe what I'm actually thinking and my purpose in this meeting. So I would be literally the guy that just finds the opportunity of creating a note from a fix and flip or whatever other real estate opportunity, right? I think that's my role in any of these transactions, right? I
Yeah.
put the buyer in place, put the seller in place, and then just create a note and then sell that to a
Yeah.
third party, right? So
Now
um,
if you're the licensed realtor, so if these are listed properties, I'm assuming you're going to be on one side of that transaction or the other, right?
yeah, for sure. And if they're not listed, I'm still going to be in one side or the other, right? So it's going to be and it I think it opens so many doors for just real estate to be moving fast. And I think that the guys that can just wait for the profit, they won't mind that discount so much because that profit will be multiplied several times in a
No,
note.
they don't mind at all, Chris. They want velocity.
Yeah.
Yeah.
So they'll bring their money in, and then after 3 or 4 properties, they're going to receive so much cash flow from this notes that they're creating for themselves and those that are selling that it's not going to be a big deal. So
Yeah, there's a lot of opportunity, Chris. Let me tell you 2 very basic different paths that we can take to help achieve these types of outcomes. One is we do have a group of investors that we work with that utilize their self-directed IRAs for purchasing notes just like this. We also work with institutional investors. Okay, now there's going to be scenarios for sure if we do this at scale and at volume that will fall into either of those categories. Okay, and I'll talk to you more about that as we move forward about which ones may be better candidates for one type of one type of investment versus another. But we're very well suited for this type of transaction, so I'll welcome the opportunity to talk to you about that. You probably already know this, it sounds like you're pretty informed. One of the things, you sort of alluded to this, one of the basic structures I recommend to people, Chris, is that they look at a 80-10-10 structure. You probably know what I mean by that. We're talking about an 80% primary note with a 10% second that rehabber might hold back, and the other 10 representing the 10% that the new buyer would bring in for the closing, right? Now, does it have to close that way? No, absolutely not. What I'm giving you is the blueprint, especially for these institutionals, what they want to see to receive the least discount or the highest payout on that note, right?
yeah, it makes so much sense. That's what I was thinking in a very rudimentary and Neanderthalic mindset, right? Um, though, so I would like to show you the numbers in this property.
Yes, sir.
There's just one thing that I don't know, and I'm pretty sure he told me, but um, I really don't know um how much does he owe, right? I'm pretty sure he told me how much, but you know, I think I didn't write that down.
Well, you know what?
I
We can
was
do this based on the assumption that you have, and if it changes, because I'm going to tell you a little secret. Things always change in these note discussions, and when they change, we just have to adjust the back end, right? So no big deal.
That's right. So, well, I just did the small calculator, right, to just understand how it works. And this is what they're looking for. This is their final price. This is what the house is listed
Okay.
for 30, right? They've worked in this house for maybe a month or two, and it's ready to go, like refurbished, completely nice. This is an Ogden. Um, so here, well, this would be the down payment, like put 10%.
Right.
And I just put 5% there because like this number is the one that needs to make sense for my buyer usually. What they're gonna pay, right?
Yep.
So paying 2,000 a month, it's 2,000. It's actually 2,400 with probably the escrow and taxes and all
Yeah.
that.
T and I. Yeah.
Yeah. So um, it's not that crazy in a 3-2, right? This is a 3-2 home
Okay.
that's fully refurbished. So I think it makes sense, but for a investor buyer that wants to then rent the home, this number doesn't make any sense.
Right.
And and I would love to have as much of the market as I could to bring in the buyer, but maybe I won't, right? So so that's what I'm thinking. Like this house, I did like a little bit like research, and it would rent for 1,700, right? In that area, maybe 1,800. It's like this is the average. So I
Okay.
used rental meter, and it just threw that number back to me, and I was like, okay, well, just it's given, right? And this is a 30-year note, right? So it's a nice yield, but I still think that the numbers don't break, in my opinion. Just trying to bring in an investor buyer won't work for this. Maybe
Well,
for
let
retail.
me back up, Chris. Let me back up and ask you a really important question.
Mhm.
What is the end game for your rehabber here? Does he want to sell to an end buyer, or does he want to hold and rent? What is his goal?
Well, he wants to send to an end buyer. That's for sure. They're just in the
Okay.
basic fix and flipping. Just they get a rehab and sell, right?
Okay. Very good.
So that's and I know the guy, and they're super open to talk about this, and they really like the idea of the speed that this thing can bring to the game. They don't know that their profit might have to hold for a bit, right? That they're going to collect it in time. But I think that's a better, like
Well,
that's the best.
let's talk about that. Let's talk about time.
Mhm.
If now there's a couple of big ifs. Let me fill in some of those ifs. If we have 10% down, which is what you've illustrated here, sir, and we have a 650 plus FICO credit score buyer, you can get this turned around with it'll be a discount, but we can do it with a minimal discount with 3 months of payments. Okay, so what I'm really telling you is this.
But just 6 cents. Well, there'll be 3 months of payments will be 7,500 or so, right?
Well, what I'm telling you is that we can't do loan origination. We can only do purchasing of a note that's already created. I think
Yeah.
that you already know that, but I want to make sure because that's a really important distinction for legal and other reasons. But we don't originate loans. What we do is we will give advice on what we can do to help them form and create, right, a note that will be highly saleable. But what I'm telling you is time frame wise, we've got institutionals that'll buy this all day long as the buyer, the borrower has got a credit score of 650 or higher. I mean, it's critical, right? You know how important credit score is.
Yeah, sure.
If that's the case with 10% down, we can get this done. It's going to have a lot to do. You know, the discount that this person receives is going to have everything to do with how long are they willing to hold the note before they sell. It's going to be minimally 3 months. Most of the clients I have are just like the client you're talking about. They're like, hey, if I can do it at 3 months, sell that thing at day 91, right?
Yeah.
And that's probably what we'd be looking at. That's workable. So I'm just trying to tell you up front. I like to be very transparent. What's possible, what's real, what's not.
Well, yeah, and I had that question, so how will I sell a performing note if I don't have time for them to perform in it, right?
Mm-hmm.
So it's like I gotta show that these guys are paying. If not, this is just
Yeah, I can tell you.
promise,
I can tell
right?
you exactly how we. I can tell you exactly how we do that, Chris. Are you familiar with loan servicing companies?
Yeah, sure. I work with a loan officer that's like my best buddy every day, right? So
Cool.
so I just send my clients towards him, but with this I'm kind of cheating on him and say like, hey, maybe there's a better way, right?
Well, what I'm talking about is not a loan officer. What I'm talking about is a company that services loans that are created by individuals or companies. Like I
Okay.
know Anna is
Yes.
familiar with a company called Madison, which is one of the largest, but there's many others. There's BiFi. Madison's a great company. I would recommend them, but it's not that important that you deal with just that one. What is important is that you deal with a large national firm. And let me tell you why they're important. Even though it's only going to be a 90-day period, Chris, they service that loan, meaning that they create servicing notes
Mhm.
so that our institutional buyer is super happy with the reporting. We can proof up, right? Instead of bringing them some Venmo receipts for payments being made, which I'm kind of being silly here, right? We actually have servicing notes from a licensed, well-respected mortgage debt collector. So you spend a little bit of money. It's I don't know. Anna, what's the monthly fee for one of those accounts currently?
Like $30.
$30. It's
Okay, so
pretty low.
yeah,
Yeah.
$30. It's a minimal expense. So you spend $30 times three, maybe four at the most if you get into a fourth month. You spend $120, okay? That facilitates getting the note sold in between day 90 and day 120.
Well, that's awesome. No, I understand I cannot originate the loan, right? But they will, it's a private transaction, so we're
Yeah,
just,
your rehabber can, and we can help them with that,
yeah,
but we have to be careful not to give legal advice. At least I
yeah,
do.
yeah. No, no, that makes all the sense in the world.
Okay, so there's one more component, one more big what if. It's what's the interest rate going to be, right? So I can give a suggestion based on norms within the note market, but it's up to your rehabber, right? Do not let them put some crazy 1%, 2%, 3%, 4% note out there. Why do I say this? I see people do this
Not attractive
nonsense
for
all the
the,
time, and they just kill the saleability of their note, right? Typically, what people want to do, Chris, is be between 2 and 2.5 percentage points higher than where mortgage rates are at for residential in your area currently. Okay, so
so,
what's a good rate where you're at right now, Chris?
so 6.5 or 5.5 for first time home buyers, 6.5 probably right now.
Okay, so I'm going to tell you that they should be at 8.5 to 9.
Okay, so let's put this inside.
Now, the rehabber's got all the discretion in the world to take my advice or chuck it out the window, right? They can do whatever they want.
Yeah,
But
but then I'll be like, dude, like we all want the same thing. Like
yes,
we
sir.
we, wa- we want to sell this note. He needs the money, so
Yes, sir. He is
they
going
can't
to
get
hurt.
it.
He is going to increase the discount, which means he will receive less net money if he
Yeah,
doesn't have a marketable interest rate on that note for us to help him get liquidated.
yeah, sure.
It's pretty simple, but I want to hit all these high points because they're critical, right? This whole process it's not rocket science. It's fairly straightforward, but it's about having the access to get the
Yeah,
transactional funding and structuring it correctly.
and 90 days is not crazy. They just extended for 90 days, right? These
Yep.
guys are saying like, hey, we've been like, it's gonna be a month in the market, and they just extended for 3 more months. So
Right.
they're looking into that horizon, right?
Yeah,
They'll
this is a workable solution, Chris. This is something that we have done with other clients. We can do this successfully.
that's one of the things. Like I one of the things that just would take the fix and flipper is that, well, if I do a seller finance note here, I will be marrying with this solution and just losing the one that could just buy it up front, right? And that's I think that's their major concern, their major pain is in how reliable, right, is this? And I have the feeling that this is pretty reliable. So when I talked with Nate about it, he said like, hey, like we can get it done in 30 days, right?
Yep.
But he's talking of another amount because he doesn't buy more than 200,000. But
Yep.
in
Yeah, I
homes
know
here,
what Nate Turner's buy box is. I mean, I've been on a number of, calls with him. I know exactly what he's looking at. The thing that we do, and he's a great guy. He really is.
yeah,
There is
yeah,
no
no,
but there. He's an awesome, very well informed, good note buyer. What he does more of is buying and selling of non-performing. That's really where he lives at.
mhm,
He does not, he has the access for sure, but he doesn't do a lot of brokering with institutionals. It's just not, I mean, you can ask him and see, but I know from working around him for a good while, that's not something he spends a lot of time on.
yeah, that makes sense.
Yeah. He's making plenty of money buying and selling those non-performing notes.
Well, you know what? And I went into PaperStack and found this one that's not performing for only 3,200 bucks, right? So I was like, dude, that's something I could nail for sure. Like,
Well, you know what? When you get into that realm, non-performing is definitely going to provide a higher yield. Provide a higher yield, no doubt about it. It certainly does. You're just looking at a totally different time horizon, right? You're
yeah,
looking at an extended time frame. Typically about a year is what I tell people is reasonable for those.
yeah, for sure. You got to nail the transaction, and then you got to just see what's going on. If they're going to pay, if you can foreclose on them or what. So
Yeah,
it's like,
you already understand the business. You've got a lot of note knowledge. That's awesome. I like working with people that are ambitious and learning about the industry. You've obviously got a lot of information already. Chris, let me ask you, if you're wanting to make this a bigger part of what you do, are you thinking of going out and I guess working with additional rehabbers in your area, or just this
sure,
one? Or
no,
what?
no, no. That's the point. Like I go to all the RIAs, like, and I want to have a relationship with each one. And but when I present the solution, I want it to be like a very structured process, right? Just a method to just like it's 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 worth your time and your money, right? So I know that I'll be able to talk a lot of people into this, right? But
Okay.
I really have to know how to structure it well, because I've been playing for the numbers with the numbers for a week now, and just fooling around with my numbers, I can see like, wow, this is a pretty good investment for somebody that just buys a note and wants to keep it, right? So,
You can
um,
do that for sure. Yeah, it's great. And here's really what I was getting at when I was talking to you about our two options are very simple. It's deal with private funding or deal with
mhm,
institutional, right?
mhm,
And you know how you just talked to me about, this deal would be north of what Mr. Turner would work with.
yeah,
Hey, that's when we go to the institutionals. It's that simple, right?
yeah, makes
I'm
sense.
just, and again, I'm a very, Anna and I have worked together a good little bit. She knows I'm pretty straightforward. I'll tell you, first of all, she's going to be your primary contact person. She has access to all the institutional buyers through me, and she is awesome at getting, those deals packaged and put together. She's going to be working with me closely on that. So I really, really suggest that you keep her informed of what you're wanting to do. She's going to help me by being closer to you, being local, or more local to the market than I am for sure. Know details about your transactions. I definitely think that it's worth our time to work together on this. What we should do as we put together what I would consider our first trial run, maybe it's this deal, maybe it's a different note, different property. But on the first one, Chris, I really like to nail down what are going to be the standard operating procedures. And I think that's what you're really looking for too. So you can have assurance of what you can be offering to these rehabbers. What
Yeah,
I'll do is I'll take you through the due diligence process. Anna's been through this. She knows what happens when we sit down and look at a collateral file. We'll have joint Zoom calls like this each step of the way with our collateral files when we build them, right? And again, just to and also because we're being recorded, I want to restate that we're going to do this as advice, not legal advice, but advice as a note broker and note investor, how these can potentially be shaped. It's for educational purposes because that's what it is. Ultimately, that rehabber's got to understand that they have to make the choice where to not only set their rate, but the down payment, the type of credit quality that they're going to require. But what I can tell you in some pretty basic terms is once we get into the collateral file reviews, we'll be able to nail down while we're in month 1 and 2 exactly where we're going to be at when we hit day 91 for them to liquidate the note.
And it's awesome because if I start working with them from like they raise their hand and say, hey, I have this property in contract. So, and this is the year ARV I want. So when they're starting, it's going to be much easier to structure all the pipeline
Yes,
from
sir.
the beginning.
Absolutely. What we'll do is we'll give them what I call modeled pricing, right? And it's exactly what it sounds like. We're going to say, Mr. Rehabber or Miss Rehabber, please plug in these variables. We want to know what credit, what credit score you're going to require, what down payment are you going to require, what valuation are you giving the property, right? All those variables. We'll go ahead and get them a quote that can be purchased at day 91, prospectively, right? Now, here's where we got to be very real about this. I'm going to ask you a question with an obvious answer. What do you think happens when one of those variables that the rehabber gave us turns out in due diligence to be different?
It'll just fall, right?
Well, the deal may not necessarily fall apart, but it's going to change
Yeah,
the offer, right? It's going to
dramatically.
change the offer. I mean, and we have to be real with them about that up front.
So well, I'm just going to say, like, because these guys don't know about it, right? So most rehabbers just this is out of their mind. This is not
You're right.
good. This is
You're right.
financial. So when we put this in the table, they wanna I'll just come and say, dude, these are the terms that we need for this to sell. Right? And they're gonna be like, okay. And they're gonna do it, right? I don't
And
think
that's a great way to do it, Chris. And I'm not your attorney, but I'm just going to say one more time, you got to be careful about saying this. What I always tell people is I say this is what you can do that is likely based on experience to result in this outcome. But you said you've been an attorney in your home country. I'm sure you understand.
yeah, no,
And
I
we,
understand.
we we've never had an issue with this. I just try to be careful because I want to make sure people understand that the variables they give us drive the offer.
Yeah, no, sure. And so what this will help me with, so if I get started with them and I'm not in day 60 when they're like out of their minds and want just to close, but if I'm in day 1, I can
Right.
start getting a buyer for this in day 1, right?
You can set up a pipeline that will work very well for them. Yes.
So that's my because seller finance deals are like well, as we say in Chile, like hot bread. Like they just go as hot bread in the market. If you put a seller finance deal there and it makes sense, it'll just go as hot bread, right? So
Sure.
that's the thing though. What I'm concerned really from the buyer's perspective is the amount of money they need to bring in. I know that there's some ways that we can sort through that, but then the monthly payment has also to have to make sense, right?
Absolutely.
So that's
Yeah,
what
and
I'm
here's another good reason why the monthly payment has to make sense. Let me take this off ramp for just a minute and talk to you about something called RMLO. Do you know what that is?
I'm not.
Residential mortgage loan officers, right? So let me talk to you about something
Oh yeah,
called
my
let me talk
friend.
to you about something called the Dodd-Frank Act. Have you ever heard of that? Dodd-Frank? It's US federal legislation that required this. Let me just give you a quick history. This is coming out of, you've probably heard of the 07-08 real estate meltdown in the United States.
Yeah, for sure.
Okay. That's what this is coming out of. They created federal legislation that required this RMLO thing. What it means is you have to have a registered RMLO, a person who's a loan officer that's got this certification when you do seller financing, right? Really any financing.
Mhm.
But they've got to sit down and make sure that the debt to income ratios make sense. right? They do a bunch of other things. They proof up the income, make sure, do verification of employment and all that. But the main thing they're doing is making sure that they're not violating, something between like 33, maybe a max of 36% DTI, right? So they're just making sure they're not getting in a hole that they can't dig out of
Yeah,
debt-wise,
yeah.
right?
No, it makes so much sense.
We don't want anybody to fail here, Chris. We were
Yeah.
talking about non-performing mortgages. Look, that happens, but I certainly don't want to be the reason for any of those happening, right? We want to.
That's a lot of suffering. Like it could turn out pretty well on the seller, but then it's a lot of suffering for a family that just
Yes,
had
sir.
the dream of owning a home.
Yes,
So
sir. We want to make this. We want to make this successful for everybody, and it can be, right? So, it is also a requirement for the institutional buyers. Now, it's not always a requirement for a private sales, but I always recommend it. Okay, I always recommend it. Why? It's just practical. Even if someone was foolish enough to buy a property and not get counseled on their debt to income ratio, I don't want to be a part of that. Let's help people, not hurt people.
yeah. Yeah, it makes sense. And I was considering just getting the loan officer license. It's pretty easy for me to get licensed. So and it's not a like too much of an investment. It's not a big course either. It's even smaller than the realtor one. So
Yep.
it would make sense, but I can still work with Tyler in this. He's such a that's the loan officer I work with.
Oh yeah, yeah. I'm any modern day loan officer will know exactly what I'm talking about. If you say, "Hey, do you have RMLO certification?" They'll go, "What are you talking about?" Of course I do. Yeah.
Yeah,
So
yeah,
that end now, if you're a party to a transaction, in other words, if you're receiving a commission referral, anything like that from it, there will be folks that will have some heartburn about you being the RMLO, but this other individual can be for some obvious reasons, right? If you have
yeah.
money coming back from that. But you can use any other connection that's licensed to do that. I just want you to, the important thing is I want you to know you will need an RMLO licensed person to sit down. That takes about an hour. They do a little review and just make sure that we're setting people up for success, not failure.
No, that makes sense, and I think I have at least two that I could easily work with. So that's
Good. And they'll make a little money doing that as well, right? They get paid for that out of the closing.
yeah, that's great.
So what other questions do you have, Chris? I know that I kind of threw this big picture out there. What's going to happen is I'll invite you, Anna and will invite you to come along for these collateral reviews as we build the first 1, 2, or 3 of these. What I'll be doing through that process, honestly, is trying to make sure not only that we understand how we build the collateral files, but that everybody, of course, knows their role, what's expected of me, making sure I inform everyone, keep everyone up to date. But we need to talk about some appropriate and reasonable ways that we can all make money from this, right? Because that's why we're all here, right? We need
Yeah,
to talk
sure.
about expectations. What are you hoping to get out of this? I can talk to you about, in terms of percentages, what's possible in the funding of these notes and the liquidation. What are you hoping to get from this?
I'm usually, you know what? I'm not very greedy in that sense. I want to make
Well, that's
money,
good.
sure. But the thing is that I will be part of the transaction. I will be collecting a commission from somebody.
Okay, very good.
Yeah.
If you're going to be the real, yeah, that's what I wanted to make sure we know is like, what is
So
everyone's
in my
role?
side, I'm just doing this because I know it'll speed up things so much for me. And
You'll get
even
more
if I'm
closing.
just collecting $7,000 of each transaction, it's going to be such a huge amount of them that I'll be so happy, right? So I'm gonna get
Absolutely.
paid. I'm gonna get paid from that down payment. So I wanted that, right?
Exactly. That's really what I was keying on is realtors always need to make sure they're getting paid out of the down payment. Yes, sir.
So I think that's my role, and just finding these transactions all over and over and over again. Um, it's gonna make it worth it, and I feel that if I get it right, and I'm able to present the buyer to each one of these, right? Everything will just flow. Now, there's one that I'm pretty interested in talking about, you guys. It just showed up yesterday.
Yeah, go ahead.
She did this fix and flip. It's a 3-door rental. So she wants to she wants to keep that one actually, but she has $750,000 in hard money to give back. So I
Okay.
was thinking to just put that in a note and sell that one out so she can get that cash in, and then the rentals be paying her and she paying also the note. That's going to be, of course, more long term and might make sense on the numbers or not. That's
Okay. And let's see. Let me think through this.
I don't have all the numbers. I need after this call, I'm gonna go ahead and call her and just collect all that information to have all
Yeah,
the numbers
that's
in.
that's absolutely what I was going to ask you for. Here's really what we need. And I'll get you some forms and information about this so you can submit these and we can communicate effectively. But basically what you're looking for, Chris, is you just need to know what your unpaid balance is, what the rate is, what the monthly payment is, and then what the person wants. Now, the note seller most times wants what we consider a full purchase, right? But I want you to know about another animal, another option that lives out there. Do you know anything about partial notes?
Maybe.
Okay, so it's exactly what it sounds like. It's not going to come into play with what we're talking about right now, but I just want you to know that when you've got a situation like this where a person has a rental, sometimes a partial can make sense if they're just looking to they're looking to recapitalize, right? Now we can always do the full sale, but I want to let you know that especially institutionals are open. Let's say that say it's a 750,000 you're talking about. If that's what they need, maybe they don't need to do a full sale of the note, right?
No,
I don't.
well, that's interesting. It's like they can bring in their own down payment, right?
Yes, sir.
So maybe, but because the property is going to be worth probably $1 million, right? So she just needs this 750 to just cash out the hard money, right?
Yeah, I understand.
But then maybe she can invest some of her own money in that, and we may see, right?
Yeah, yes, sir. All of those variables will affect whether we ultimately, and she's going to make the decision, but we could recommend a full purchase of the eventual note or a partial, depending on what her needs are. And that's really where we start, Chris, is just say, sir or ma'am, what are your needs? What are you trying to achieve here? How much money do you need when? What do you want to do over the next 5 to 10 years? And then structure the offer around that.
Well, it makes sense, and I think that um, and JR just told this to me, like nobody wants the cash really. They want the cash to do something else. They're not going to sit in a pile of money just to let it burn right through time. So
Well, unless you're like, I don't know if you know anything about a cartoon called DuckTales, but if you're like
yeah,
if you're like Scrooge
yeah,
McDuck and you know who Scrooge
yeah, and
McDuck
like
is?
swimming in the cash, right?
Hey, I went out
You
on a
know
limb there. I didn't
that
know if
that
you'd be
that can
familiar
make
with that or
sense
not,
a
but
bit, right?
maybe if you're Scrooge McDuck and you want to swim in your money, you do that. But otherwise, it doesn't make much sense.
Yeah, yeah, for sure. Yeah, so well that's the thing, and I had the gut feeling that this could turn any deal into a seller finance deal.
Well, it
But
can do a
then,
lot, Chris. Yeah, it
but
really
but
can.
but
It
but
can
then
it
it's
can
going to
do a
be
lot.
probably only 80% of those, right? But that's not bad.
I mean, seller finance deals are on the increase. You probably already know that. I look at a report every year that comes from some industry friends, and it's increased last year to this year considerably. It's currently about 6% of the market, depending upon what numbers you look at. But 6% of the residential real estate market is huge, right? If you're looking at
Yeah.
6% of any local metro market, that's a huge opportunity. Yes, you could do quite a bit of business with these types of transactions.
That I feel because many people don't understand and then they don't know the path, right? But this is a real good way to just um, create a very reliable path to
Can be,
just
yes. What you can do, Chris, with your knowledge of real estate and how to structure this as a real estate agent, and Anna helping you connect to either of these funding resources that I've talked about through 5WB, you can build a powerful option for many of these investor rehabbers.
yeah, no, it makes so much sense. It makes so much sense.
I
And
like it. I love working with people that are, already industry knowledgeable. And, Chris, you pretty much had an idea of how to do this when we came on the call today. I didn't know that that would be the case, but it's not going to take a lot for us to help you take the concept you already had and make it actionable.
no, and what I like about this is feels like you guys are the outlet for this notes, right? And that's a central piece of it. Like, we have an outlet for this notes.
Yep. Yeah,
Just
I have no issue whatsoever telling you wholeheartedly we can make that end happen for you, whether it be through, private investors or the institutionals. And honestly, typically the smaller ones are going to be private investors. Anything usually over about 300, 350, that's going to go institutional. It doesn't have to be that way. That's just what's typical. I'd rather you go ahead and know that up front.
No, that's great. And I want to, so whenever I'm structured, and these are the full purposes of this call, just getting to know if we have an outlet here, and that's number one, check. And number two, how are the notes attractive for this to be an outlet, really? So, and that's what we've talked about. So, like, holding it for 90 days, 650 up for the guy that's buying, like, and 10% down. So I think that's pretty straightforward, my guy.
Yes, sir. And the more of each one of those that you increase, right? Better than 650, better than 10% down. That just increases the amount of money or lessens the discount, however you want to look at it, that your note seller is going to receive. But those are really the points that I always make to people with the rehabbers I work with directly currently, Chris, is don't shoot yourself in the foot by ending up with a borrower that's under 650 or having less than 10%, because, especially with the institutional buyers, it's not personal with them, right?
Yeah,
It's
no,
just
sure.
business. And if we go below those numbers, they're just going to say, sorry, the offer just went down, right? And we don't ever want to have that happen.
No, 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 no. And I feel that this could be a solution in many ways, right? So for people that are just um, owner sellers that just want to sell their property themselves, not go through real
You
estate
can
agents.
certainly do that as well, Chris. It's a great resource for investor rehabbers, but I like the way you're thinking. You've got an open mind. Yes, people do use this resource for specifically sellers that have 20% or greater equity. It's not really a great resource for people that have less than that equity for what I think are some self-evident reasons, but it's not that you can't do it, Chris, but it gets tough when you have less than 20% equity.
No, no, that's right. No, and that's why this other guy that I have, that's like, he's the one that just is selling the home for more that it's worth. He actually had to get a conventional loan to just cash out the hard money guys,
Yep.
and the only way to sell that property is through subject to. I don't feel it's going to go any other
Well,
way.
subject to, or you're probably familiar with wraps, right? Do you know what a wrap mortgage is?
So I have the notion, but I don't think I have it precisely in my mind.
Okay. It is permissible in every state to do what is known as a wraparound mortgage. That basically means that you just create a mortgage with that new buyer. One of your sellers could create a mortgage which it's listed literally as a wraparound mortgage. Everybody knows that that's the case, that an underlying mortgage is still being paid from that payment, right? And the purpose of doing that typically is when people are in the situation that you've just talked about and need to create the mortgage so that they can sell it off and have that liquidated. Okay,
Yeah,
so you can do that with anybody. You can do that with a normal home seller. You can do that with anybody. They can create a wrap, okay? And that's what happens many times, especially when you have somebody that maybe got a mortgage 4 or 5 years ago at a much lower rate, okay?
yeah.
They can let me
It
let
makes sense. This one is so new, and it wouldn't. It just wouldn't work on a wrap. But if it would be in that case, that would be awesome. Like, I
so
know the
just
property could go like that.
Yeah, just know that that's an option that's out there. You can do something that's called a wrap. Like, it makes things a little more complicated, and I don't want to do that needlessly. I don't want to make things more complicated, but just, I'll present some options to you like that, Chris, as Anna and I are working with you. That's one thing that can be done, especially with those, more typical home sellers we were talking about, not the investors that have greater than 20% equity. Many times they can create a wrap, okay? Sell to the new borrower, go the 3 months, 3 to 3, maybe 3.5 months, they'll be able to close. Now, what we do, I hinted at this earlier, Chris, but it's very important. We're diligently working in month 1 and 2 to make sure that we close as early as possible. Okay. It's never the case that we're just sitting around in months 1 and 2 twiddling our thumbs. We're going to be working through the collateral file, making sure we've got any questions about the notes, the, the evaluations, the appraisals, all that sort of thing done. So the goal would be to actually close on day 91. Now, in reality, we'll typically close a week or two after that third payment hits.
Awesome. So, I just, this just came to mind. This is a property that I know of that's in Kaysville, and they've just, several buyers have failed on qualifying for this one. It's a big property.
Okay. Do you know why they fell apart?
Just they couldn't qualify for the mortgage. It's a
Oh,
700,000 property
okay.
with a mortgage. That's still in place, and it is an FHA loan that's 350,000,
Okay.
and they have like 3.5 interest rate, which is pretty good, and it's marketed like that.
Yeah, that's exactly the kind of scenario I was telling you about where the seller may want to think about a wrap. Not only
So
does it,
that's why it came to mind.
yes, sir.
Though the big problem with this property is that it's so outdated. Like, it's very well kept, but very outdated. So
Okay.
anybody that comes in will want to just do something with it, even if they're not actually a rehabber. They will just need to, because that's like super outdated.
Needs
Right?
some serious updating. I get it.
Yeah, it's super livable, but then you get in and you feel like you're in the 80s, right?
Well, if you're going to spend that kind of money on a property, you want it to look nice.
Yeah, for sure. So I'm trying to bring it up here, but this thing is so slow. So just because I can go back to the agent and say, like, because now her client is like just wanting to sell. The contract is their contract is about to go south, right?
Right.
So they could be pretty open to some creative solution. She wants to get out of the property and go buy some smaller thing in South Carolina or whatever, right?
Okay.
But
So here's what I think would be good for us to help with, Chris. You won't need us to do this very long at all, but and I'm not trying to push my way into your conversation. I don't need to do this if you don't want me to, but I'll be more than happy to invest in the relationship to work with you, to talk with some of these first maybe 3 or 4 or 5 clients with you to explain what we can offer. And you'll be able to pick up the verbiage, the documentation, and everything that Anna and I can offer.
it makes sense.
And whenever you're comfortable, you'll be able to do that yourself. So if you want me to do that, Anna has access to my scheduling. I'll schedule with you to do that, to talk to your first, 3, 4, 5 customers, just because I hear you clearly. You're saying, look, I love the idea, but then I need to know what I can demonstratively provide for these people, right?
Yeah, it makes sense. So, all right, maybe I'll just put that up and just go work with Anna to just get some scheduled, and maybe we can have a series of calls in a day or
I
two.
think that's a good idea, Chris. And here's why. And I don't mind having as many calls as we need to, because I'm all about investing in business relationships. But I like to talk about potential transactions, whether they close or not, right? So let's talk to your client, and we'll have a conversation just like this that's open and free flowing with them. And I'll explain what we can do with your assistance, with you providing the on-site professional real estate services. And that's really, in my opinion, the best way to move forward, because we could have 6 more phone calls about what if and then this and maybe
Yeah,
that,
sure,
but none of it matters until we talk about a real deal, right?
sure. And that's my whole point. Just sitting with them and say, hey, I have this opportunity for you. Will you see it in a four-way call with your client, with you, with, like, speaking of the other realtor, with your client, with you, and with my guys, and he'll be like, probably they're gonna say yes. They have nothing to lose.
They have nothing to lose whatsoever. Yeah, we charge nothing for our services. We're either successful in helping them get their note liquidated, or all the time we spend is unbillable, right? So there's no expense for them whatsoever, much like your real estate services, right? We live from the closing of the transaction. And I like that idea a lot. We're totally open to that. And like I said, Anna can help you with scheduling that. And she's going to be a great resource for you. She is helping me prepare these collateral files and submit them to the institutionals. I'm actually kind of excited about this, Chris. Frankly, most of the people I talk to, it's not this productive. Let me just put it that way. So this has been a very good phone call.
Oh, thank you. And yeah, in time you'll see that I'm pretty creative. So once I get all the pieces or all the tool set in my bag, it's gonna flow. It's just gonna flow.
I like that.
This is
All right.
wonderful.
Yeah, thank you, Anna, for this.
Yes,
I really appreciate this, and I feel that there's a very big wealth creating opportunity right here.
there is. Yeah, yeah, and we can meet in person too, if you prefer that, or go around and look at properties together, that's fine too. So just let me know what you need, and we'll schedule something with Jerry and move forward with whatever we decide to do.
That's
So
great.
that's
So
great.
I'm gonna start texting you of this meetings, right? So
Okay.
this first guy just his wife had a baby last night, right?
Oh, wow.
Oh,
I was like
congratulations.
texting him like, hey, how did it go? Right.
Yeah.
And so everything went fine. So he's happy, but he's gonna probably he doesn't have as much time. But then we can talk with Tanya. I think she's the one that wants the 750, and probably start with her and then with Robert, and then I'll just keep bringing people in.
Okay, that's excellent.
Sounds like a great plan, Chris. I'm going to tell you the same thing I mentioned to Chris, Anna. I never know when people ask, for a call like this, what the outcome will be, but I'm actually very positive about this. I think that this can work. You obviously understand what the potential is, Chris. I look forward to working with you. I'll make an investment into this in time. And you may or may not already know this from talking to Anna. She is super diligent in the note business and is going to be a great resource for you as well. I look forward to working with both of you on this. Anna, like I was saying, you've got my scheduling link. Let me know when Chris wants to talk again with a client, and we will start working on our first transaction.
Awesome.
Sounds wonderful.
Great. Thank you very much.
Yeah,
We'll talk later.
nice to meet you.
We'll talk very soon.
I'll be talking to you tomorrow for sure, Anna, right?
Yeah, we will.
All right, awesome. Have a great day. Nice to speak with you both.
Nice to speak with
Bye.
you too. Thanks, Anna. Thanks, Jerry.
Have a good day.